So, hi, very good evening. Welcome to this workshop, day three. Okay, very few have joined today. Okay, don't worry. I will be sending this recording to our subscribers, whoever is not attending. But let's start this workshop. A quick update on the previous workshop. Let me share my screen and let us understand the glimpse, whatever we have covered. Okay. Let's recall quickly on whatever we have covered. Hope I am audible and clear. Please type in the chat if you're facing any issues. Okay. So on the day one, we learned about the call option and put option. What is you mean by option buyer, option seller? Okay. We have learned short straddle, short strangle, ratio spread, covered call, caller, put calendar spread, call calendar spread, double calendar spread, putbacks. Almost we are here, butterfly. So today we will complete this workshop we will learn about iron condor, iron fly, portfolio hedging, and all other things. So short straddle, ratio spread, we have all covered this strategies. Okay, we were here, I believe. Okay, butterfly strategy. We stopped at butterfly strategy, and whoever has deployed the butterfly strategy was in a huge profit. In fact, we made a good profit in the yesterday's market when it was a fully volatile, right? It was a Sensex expiry, and we gave very good recommendations also. Okay. Now, after this butterfly strategy, today we will learn about the iron condor. Okay. So, iron condor is a strategy. It's a very low risk strategy. You might have seen many strategies, people sharing in all social media, risk only 500 rupees and make 5,000 rupees kind of thing. Okay. So, how to build this strategy and at what condition you have to build this strategy, we will learn today. Okay, it's all about selling OTM put and call. Okay, and then buy the OTM call and put. Okay, risk is defined. The risk reward is also defined both. Okay, so let's see how to build an iron condor and in what situation we have to build it. Okay, let me share my other screen. So to stimulate. Okay, so let us build a small iron condor in the Nifty. Okay, dismiss. So to build this strategy, you can just come here. Okay. What it says, sell OTM. Right now, Nifty is trading at 22,713, right? 713 is like 700 is the ATM. So OTM call would be 22,800, 22,900. These are all the OTM calls and these are all the OTM puts. So we have to sell OTM call and buy OTM call. Okay. And here sell OTM put and buy OTM put. Okay. So this is how you can this is called as iron condor. Okay. So that's how you can see here the risk is only 1,000 rupees and the reward is 5,000 rupees. And Nifty has to close between plus or minus 1%. Then you will make good profit here. So the amount required for this iron condor is just 61,000. Okay. You can just uh, build a multiple iron condor. If you are okay to lose 1,000 rupees, this is how it is. And if you want to take more risk and more reward, okay, you can just buy the far behind OTM, okay, rather than buying very immediate OTM. You can buy 23,000 call option and sell 22,800. So here the risk increase, but the reward also increase. So if you see here, risk to reward is 3.4. Okay, you will lose only the maximum what you can go loss is in 2,900. But here the Nifty range also got increased, right? In the previous this one we had only 1%, but here it is 1.2%. If the Nifty closes between 22,400, 446 and 22,954, You'll make very good profit here, up to almost 16% of the deployed amount. The amount remains the same. Okay, so you can just, if you want to still reduce the risk or increase this range, you can sell still OTM now 1, 2, OTM 2. OTM 2 also you can sell. Likewise, you can create different kind of iron condor. It's not necessary. It's all about where you actually buy. Okay, this is one iron condor where you will again have the same this one, but the maximum loss is only 18%. 2.3 is the risk to reward, 62,000. So this is how, if you create this on a weekly expiry, if at all, if the Nifty is closing between 22,428 to 970, you'll make very good profit of 7%. So what exactly you can do is, like, you can, if you want to go for still iron condor in this level, see, most of the sellers are here. Almost 22,000 put is high open interest, and here 23,000 call as the highest open interest, and here also you can see 23,500 as a highest open interest. In the same way, it's not, if you want to go high probability iron condor, you can sell any here. Just clear all. Okay, 22. If you know, looking at the open interest, the highest open interest here is 22,000, right? You can sell this 22,000 put and buy 21,800 or 21,700 call here. And the highest open interest here would be 23,000 call as the highest open interest. Okay, you can just sell here, or 23,200 also you can sell, and to cover it. Again, this becomes a iron condor with a range of 3.5%, 14,000. Here, the risk will be a bit on a higher side as we are going far above the OTMs. So this is whenever there is a sideways movement, you can see here, you will get a more range here. The probability, the maximum loss what you can occur is on 14,000. If you want to reduce the risk, it's very simple. You just don't buy here. You can buy this call option. On the upper side, you will get only 3,000. And if you want to again downsize the risk here also, you can just buy any of the put option very near to where you have sold. Okay, if you, okay, here the risk is 0.5%, but the probability of profit you can see here, it came to 71%. Okay, so because the range is 3.3% up to 21,900. See, wherever it closes, you will make 3% of your deployed amount. So for 64,000, you will make around 2,000 rupees, 190 within. See, this 3% is within 5 days. Okay, right? On the date of expiry, say suppose Nifty, wherever it closes, if it is closing even down by 2% or up to 3%, you will make uh, profit, and up to 3.3% you will make, and on the upper side 2.2%. So this is good to deploy whenever there is like 2 days to expiry, or very in the initial beginning. If you have a high weeks, you can just collect the premiums and create this strategy with a limited loss. You will make good profit between most of the time. See, 71% you have a probability you can winning chances. If you feel that the market is too risky and you don't sell a put option here, you don't buy a put option, you can go and buy and sell very lower put option, like even if you uh, sell 24 rupees put option and buy 15 rupees. It's all about the spread. Now you 79% it became, but the risk would be high. If it is coming down maximum by 16%, you will lose maximum here. So that's how it is. So let's see now. And this is iron condor. Next would be iron fly. Iron fly is nothing but selling ATM and buying OTM. Okay, so let's create iron fly and see. Let's delete this. Iron fly is nothing but you sell both call and put. Okay, at ATM. ATM is 22,700. You sell this and this. Okay, you will get it's a straddle. But if you buy this OTM, and buy this OTM, this will become an iron fly. You can see here, you lose, if you lose only 424 rupees, 426 rupees. And if you gain almost 6,000 rupees. So the risk to reward is very high, 14. This happens whenever market closes in a very tight range. So the tight range is around only 0.5% to 0.4%. Okay, so you can create this iron fly at any level you want. It's not like that you have to create only at the money. You can go and create iron fly in this area as well and this area as well. And usually at the money will give you more comfort. It is advisable to go 2 days before the expiry when the market is consolidating. You can just take 400 rupees market. If you know exactly where the market can close, if it is in a tight range, right? So if it is in a tight range, we know, right, on the date of expiry, what exactly may be the closing by looking at the open interest, because open interest will be keep changing every minute, every day. Okay, so you can just calculate the open interest where it is and create a iron fly for the maximum profit. Okay, with a minimal risk. The risk to reward will be very high. This is how you can create an iron fly, and you can create an iron fly with a weekly option as well. Not only with if you create an, you'll get more if you go for 13th April. Okay, if you create iron fly like this, you can create iron fly by this and by this. This is the setup. Okay, so if you see here, this is a 100% profitable strategy. So you will not lose anything. But if the market closes at 22,700, you will make almost 6,500. Okay, so you can always hedge your position. It's not mandatory that you should hedge your positions only with the bi-weekly options. You can sell next week and buy this week options as well. That gives more, what do you say, if you buy this and this as well. Okay, so wherever it goes on the date, if you create this on today is what? Okay, today is Friday. If you create on 5th, by 5th, if the market is going up, okay, 6th of April, it is 1:1. Okay, but probability of making profit is 51% because you have already hedged your positions with the weekly option and you have sold next weekly options. So obviously you will not lose anything if there is a wide movement here, huge movement plus or minus, say market if it is closing at if the market goes bullish, okay, 2% or 3%, you will make 6% of the profit. Even if the market goes bearish by 6%, you will make 30% profit. If the market remains here, you will lose only certain amount. But in the C, if you go and in the profit and loss, you will be losing much here. You will be making profit in this, and still you make a profit of 19,800 if it is down. Even if it is down 6% or 7% or 9%, you will make profit. And even if it is going up wildly by 5% or 6%, you will not make more than 20,000 loss on the date of expiry. You can just check out here. Even if it is, you will lose very marginal amount, again 13,000 if it is going flat. So you can go and buy here rather than buying ATMs, you can buy OTMs as well. 130 rupees, 130 rupees premium. If at all you feel the volatility. If there is a huge movement, you will make money. So iron fly is nothing but, as I told you, you sell ATM and buy OTM. OTM depends upon whichever OTM you want to, how much ever you want to take risk here. So if you can design it in this way, usually it happens in this way. This is whenever there is a sharp like knife like sharp edge. Okay, 1,000 rupees is the risk here. Okay, and the reward is 11,800 if it is closing between 0.9 and 0.7. Okay, so iron fly it is most famous whenever the market is in a tight range. Okay, not in this market of situation. It's like very uh, tough, right? So market now with this VIX, it is very volatile. On the date of expiry, if you want to make some high risk to reward profit, iron fly is the one which you can deploy. Okay, next, let's comes to the final part. I think we have covered almost 14 strategies which we have decided. Out of 14, I think I have shown many other strategies, different ratio spread and all. So now let us come to the portfolio hedging. Those who have a lot, good number of portfolio, uh, how to hedge your portfolio. Like as I told you, if you have a portfolio, and sell long-term options, you can adjust the long-term options. Say, as we have already covered this in covered call, if you remember, it is same like a covered call. Protecting your portfolio, to protect your portfolio, you have to use two strategies. Okay, two strategies are one is covered call and one is cover. Okay, so if you can add, as you see here, how actually you should cover your portfolio. Say, suppose if you have infi stock, okay, if you have infi stock here, you can build the strategy here. Say, suppose if you have 500 shares, or if you are long, as I told you, if you are long at 1300, okay, you can go and sell the call option, 1350 call option. Your buying range will come down by 2.87. In the same way, if you have 500 shares, if it is not going to 1550, you will make 34,000 profit. And if it is moving higher, if it's almost like you make definite profit. And if you have a holding, you will make 35,000. And you can protect if you, instead of keeping a stop loss, you can just buy 1200 put. So the maximum loss also is defined here. So you can adjust the call option. What does that mean, right? So if it is not performing, if it is going down and down, so after selling 1350, you can sell 1300 call option as well. Okay, so that again you will get more and more. You can just sell two lots as well. Okay, so it will withstand almost up to 1218 and up to 1432, 10% high also. But if it is closing in between, you will make very good profit. With 1 lakh of investment, you can make around almost 31% of returns. The probability of profit is 59%. So if you have underlying asset, I told below, if you have very good portfolio, just to protect it, use options. Okay. So if you have 500 shares of Infosys, it's worth around almost 6 lakhs, right? So you pledge that 6 lakhs holding, you will get 5 lakhs margin and sell only the call option. You don't have to buy the futures here. I just took an example of futures because uh, there is no cash holding here. So if you sell only the call option of 1350 or 1300 as well, it's nothing but you have sold your portfolio for 1340 and you don't have to buy any of the put option. If at all, if you want to put a stop loss, better go and buy uh, any of the put option here. You can put a stop loss at 1120 so that the unlimited profit. See, probability of making profit is 64%, and you make unlimited profit if it is coming down. Your portfolio, you don't have to panically sell your stock if the Infosys is coming down. What happens? People with a high portfolio, whenever the stock is coming down, they just go and panic and just sell the stock, and again they will buy back when there is again FOMO effect. They will go and buy at a higher rate. You sell it at 1300. Okay, again, if the market starts moving up, if the Infosys start going to 1340, 1350, again, you will go and buy at 1340 and it goes on a consolidation. So usually portfolio, you should sell it only when you need money or if there is a proper exit system. Okay, so you don't have to, if this is for long-term portfolio hedging, like you can collect the kind of rental income. If your portfolio is not performing, just sell a call option. It's nothing but every month you book. a profit at certain price. So if you sell 1300 call option, okay, it's nothing but you collected 40, you sold your stock at 1340. Okay, you can sell it at a higher price as well. If the sentiment is bullish, you can sell it at 1374. If you sell 1350 call option with a premium of 24, how this rate is defined, it's all about if you have 1300 and 1350 plus 23.8, 1374. So up to 301374, you will get 9,500, which is almost 13%, right? So every month you can just make sell a call option with a proper holding and make this monthly income. Okay, the probability of profit you can see here, it is 75%. And if the stock goes up, you don't have to worry. You have an underlying asset, right? That will give you very good returns. If it is not performing, you will get this amount as a rental income. And if you still want to cover for a black swan event, you can just go and buy any of the put options very down. Okay, so that if the stock comes down, say suppose in any black swan event, like how it happened to Satyam in 2008, right? So it fell almost 80 to 90%. If the stock falls by 15%, you'll make almost 42% here. You'll make already 30,000, and it keeps on going. How much ever it falls, you'll make more and money. It works like an insurance. So this is how you have to adjust your portfolio, okay, and keep selling the calls. And if there is a black swan event kind of events, so you can protect that with rather than putting a stop loss, you can go and buy any of the puts. You have already collected here the premium of something to 23 rupees, right? So you can spend around 8 rupees for more, or you can just buy a cheaper option stating 1000 rupees so that your profit here will become unlimited and you make 8,000 rupees, which is 12%. And the probability of profit you can see here 74%. And if you don't want to sell it at a very even 13, even 5% high, you can just go and sell any of the 1400 call. The probability will increase 84%. Okay. And you will make only 3,400 rupees. You will be selling your stock at 1409 kind of thing. Over and above 1409, you will go under loss. But in the loss, it's not practically a loss. Your portfolio will be increased by almost 8%, which will give you a very good amount. Okay, this is about portfolio hedging. Now, let us come to the technical analysis, how actually you can go for a technical analysis, right? So what are pivot points, RSI, MACD, we will understand moving average and Bollinger Bands. Okay, as I told you, I'll be sharing you this, uh, whoever is interested, I will be sharing my code. You can, that will give you very good insights about the technical analysis. Let me log in here. So technical analysis, as I told you, it will be good to analyze the trend. Okay. Yeah. If you see Nifty here, you can check out the yesterday's graph. It was so beautifully respecting all the levels. See, if you see here in 3 minutes, so our technical analysis chart gave buy here. You can see here, it gave a buy here, and you can take any of the range in the L6 level. So L6 is the bottom level here with the code. Okay. Above L6, we usually initiated the buy call. Above L6, so next target would be L5 only. Okay, so this is the levels which I think many of you are already in my group. So usually these are the levels where you can see here, it will be always respected. Okay, so you can see here in the 3 minutes graph, if this is here, you can enter here. Okay, the stop loss would be the previous low. If you see here, the weekly L4, it respected like anything. Just guessing. I have not done anything, any modifications here. You can just see here this bar. Okay, this is again weekly setup, weekly L4. This was the stop loss here. Okay, if you'd have entered here, okay, above this also with the 3 minutes L6 22,287. You can just check out here. There was these are all the stations where it consolidate and again decides which direction it is going to go. Okay, these two are the fake. It was in touch with this next L3. Okay, these are all already weekly. You can say once this is broken here, you can see the hammer here, inverted hammer. Okay, and again boom L5. If L5 is broken, next next target is L4. You can see here every level you will find this V shape zigzag movement. This level you will find this support again. It gives again pullback confirmation, and here in the L5 level also it tried here touching L5 again. See L4, L4 again one dip here to test L4, and again boom up to pivot. Pivot is the place where it will go for consolidation. If the exit range, if you enter here, okay, in L6, usually the exit range, if it is here, you can give one exit here, again re-enter. Again, if it is touching L3, you can see here L3, after touching L3, immediately it will show the rejection here. See how much is the rejection here. This is a wonderful reaction. And again, if the L3 is crossed, it has kissed the pivot. This is the exit point. Don't usually for option buyers, it is very important, or for any of the stock you can say you can take Infosys with see here L3. L3 is crossed, pivot is crossed, H3 is crossed. Usually, this is called as the purple line is the upper pivot point. This purple line. These are all the levels where the profit booking comes. Okay, so if pivot is breached, you can just check out L3. See L3, there is a profit booking here. Okay, again in the upper pivot, there is a profit booking. I can take any of the stock. It happens same. Say, as I told you, pivot is a place where there it will stand for long. This is the area of consolidation. Usually in the pivot, it will go for a consolidation, and above the pivot and above the uh, R1, it will again, momentum will start. It will not stop. You can check out any of the stocks, Lupin. Okay, if you want to go really understand the VWAP and Bollinger Band, I will show you how. Before that, I'll just show you few strategies which I have been trading. So you can just see here. Okay, my it's a draft portfolio. Whenever I create any of the portfolios, this is all live actually. We do it in our corporate account. You can see here Nifty December 2026. I created this strategy. It is already sitting with a 1.5 system strategy. This is how you can see here very only 5 positions I created very long back. Okay, and just leave it here. This is all the parking of the amount. Okay. So you can see here, I created this strategy. Okay. So there was a 88% probability here. So it will sustain up to 27,600. Okay. You can almost see how, what are all the strategies I have built here for, this is all December strategies, 29th of December. I have built this is in 1 lakh profit. This is see the call option which I sold for 1,100. Now it is at 283. Can you just see 2283? How much is the DK here? So the option which I sold, put option, okay, it is which I bought it at 774. It is at 2,400. So so downward, there was an unlimited profit. Downward, there is no limit for us. So likewise, you can just paper trade and just deploy your strategies as well. Now coming back to the technical analysis, I just wanted to. There is a lot of analysis you can just do it here. Nifty graph. So usually we don't completely depend on technical analysis. We use only for the trend reversal kind. You can come here and have the major thing is you can go for a pivot point standard here. Once you have this pivot point, you can just see here you will have pivot point and Bollinger Band. You can just click on Bollinger Band. See, usually Bollinger Band will help you what would be the range here. Okay, this is upper Bollinger Band, this is middle Bollinger Band, and this is lower Bollinger Band. You can go with the different time frames, 1 minute, everything changes here. So it gives the trend identification. See, suppose if there is any curve like this, so you can see here, usually the buying happens above the middle Bollinger Band. If it is crossing any of the candles here, you can see here, this candle opened here and touched the Bollinger Band and it is middle Bollinger Band. It opened here and you can enter here whenever it is above the Bollinger Band. We use this in option trading. Okay, above the Bollinger Band, if any of the green candle, if you find, you can enter here, 22,600. And whenever it touches, don't exit here whenever there is a candle here below the Bollinger Band, upper Bollinger Band. This is the time where you have to exit and or else you can keep this as a stop loss. If you have entered here and you can keep the low of this as a Bollinger Band. Whenever the touches it, if you're trialing, you can just trial this here and exit above the Bollinger Band. Above the Bollinger Band, it becomes bullish, or you can go for a time frame of 3 minutes as well. If you see here, middle Bollinger Band, you see the hammer here. Okay, big candle without touching the middle Bollinger Band, enter here, 22,278. And boom, there is no, and you can see the trend here. Bollinger Band will give you the curve. If it is touching above upper Bollinger Band, don't book the profit. Above upper Bollinger Band, that is where usually the maximum volume comes in. If you want, you can just go for a volume and see. You can go for just volume or you can go for volume index as well. Even volume index also will give you very good. If it is above the volume index here, you can just see here, the volume also will be keep rising. This is the hammer above Bollinger Band. See, touching the upper Bollinger Band. It will always see here, upper Bollinger Band touching, touch. All the candles, it has been touching here. These are all the exit areas. Again, re-entry if it is above the Bollinger Band. If it is closing below the Bollinger Band, you have to exit. See, the Bollinger Band says when it is narrow, it is in consolidation. Whenever it touches the upper Bollinger Band, okay, that's where the momentum starts. Okay, so don't enter. See here, if you see all the candles, nothing, all the candles are touching the Bollinger Bands, middle Bollinger Band. Okay, Bollinger Band, above the Bollinger Band, you can see here, there is a candle here, green, you can enter here. Okay, again, this was a fake. It touched here. Of course, it has given already good movement here in the three movements, but it is a fake one. Here is the real one movement, not touching any of the middle Bollinger Band. It gave an exit till here. So you can always use this kind of technical. Uh, these are all very basic. You can go and apply it in any of the normal charting. But as I told you, we will give you this one where you will get these levels without any Bollinger effect. So these are all the levels where the profit bookings come. You can just check the Lupin. See here, L5 is crossed, L4 is the target. If L4 is crossed, L3 profit booking. If L3 is crossed, pivot. Okay. And in the same way, downwards, if this is broken, the next target would be direct L4. or L6 here. So here, if you see here, this it has been respected. These are all the lines which where it will respect the levels. Okay, this is the point where you have to make your mind whether to re-enter or enter. Okay, that is where if there is a fall, it will stop falling at these levels. Okay, if there is a recovery and what is the exit point. If you see here, if you have entered here, you can see here at this level, there is a small profit booking. Again, above this level, you have to re-enter. Here, if you see in this level, there is almost, it waited for almost 11:15 to 12:15, almost 1 hour it was here. And then it crossed this and touched L3. This is the exit point. From there, it books a profit. I'll be sharing this uh, coded one for all my subscribers. You just ping me and the support group if you want this. I'll be sharing this. Okay, so next is what you want to move, moving average. The moving average is one more indicator. What it averages the, so you can see here, there will be moving by moving average. You will have nine here. Okay, you can go and setting nine, length of 9, 15, 20 days moving average. You can go for 50 days moving average. Okay. Usually, for intraday, you can keep 9 as a this one. Above the moving average, we can just style, we can just plot this as moving average as green. Okay, please share. I will share one. Okay, if you see the moving average also, if it is above the moving average, or you can add one more moving average, okay, with a different time frame. Okay, you can go and tap 20, 9 crossing 20. Okay. If you want to understand in depth about the technical analysis, you can go and watch out my YouTube videos where I have explained VWAP, super trend, okay, the AX, DI plus, DI negative. There are a lot of indicators. Okay, it doesn't matter. It's all about, as I told you, if you want to make money in stock market, the technical skill is only 10%. The only thing is you should be aware of all these technical analysis. But using this technical analysis, you can always predict the trend. If you see all the technical indicator, most of them are a lagging indicator. It's only about identifying the trend. But real entry and exit also, you can just check out if you have time. Otherwise, you can follow us. We'll be always giving you the ideas by looking at analyzing all the charts because we have an software, AI software, where it will just scan it in seconds. Like, so you can just read this in Nifty or Bank Nifty. What if you want to go and analyze it? So we have a scanner kind of thing. Whenever there is a breakout of Bollinger Band or moving average, whenever there is a huge volume kind of thing, we get an alert and we push that into the our research team. Then we will analyze and then we will create an idea. So this is a moving average of 20 and 9. In the 20, we can give the style as blue with a thick line. Okay. So here, usually what happens when the 9 moving average crossing the 20 days moving average, that is where you can enter here. If you see here, that's where I have made it very thick. With only moving average, also a lot of people trade and build strategies. Okay, you can check out my YouTube videos. I have created a lot of algorithms with only the technical analysis. Okay, see, whenever there is a moving average, this is the blue one. If it is crossing here, okay, 9 days moving average crossing. Okay, this one is 9 days is the green one. Green one crossing the blue one. purple line. You can see here, you can enter here. Again, you can check out the Bollinger Band. It is above the upper Bollinger Band. Just enter it simply. You can see here till it touches or crossover here. Here it has touched, still not crossover, still no exit. So even with 3 minutes, 9 days moving average crossover, you can just see here any time, or you can, if you want to go for a short position, this green line crossing the purple line, it was a gap down opening. Okay, you can go and check out in 5 minutes as well. It gives, see here, there is a crossover, 9 minute moving average, 20 moving average. Simply short it. Don't hold it here. So here you see here the green line crossing. It's all gap up, gap down opening. Okay. It's all about whether a trend indicator, as I told you, rather than looking at a trade decision, you have to understand the trend. If you know the trend, you know what to do, right? Don't chase and deploy all your amount into option buying and take a directional trade. Be in a strategy. If you understand the trend here, go for a bearish strategy. You know which are all the strategies bearish. Okay, call spread. Okay, call bear spread. You can go for a calendar spread. Okay, call calendar spread, which is a bearish strategy, right? So you have to analyze the trend here and go for a strategy and be always confident about your strategy till here. When to exit? Okay, here, if you have entered bearish strategy, this is where you have to exit. Clear indication, green crossing blue. Okay, and in this area, don't go long because the Bollinger Band is very narrow here. Go for neutral strategy. So this technical analysis, I'm teaching you not to go a directional trade. Okay, keep this in mind. Okay, this is required what kind of strategies you have to deploy. Okay, I hope you are following me, right? So this will give you a confident of whatever strategies we have learned, 14 to 15 strategy. Okay, by looking at the technical analysis, understand the market trend, and then deploy the right strategies. That will reward you like anything. Okay. Because sometimes, even after learning 15 strategies, okay, if you are not sure which strategy to deploy in what condition, again, you'll be messed up. So, like, I think a lot of people on yesterday they deployed bullish and bearish strategies and asking me what to do. Okay, so usually if this is a crossover, this happens in a gap up and gap down opening. Okay, so any given point of time, it will be true. Okay, I told you no technical indicators are all lagging indicators. Once it is done, then only it will show you. I told you don't go and take a trade blindly on a single sided using technical analysis. Lot of people, 90% of the people, okay, lose money because they follow technical indication and take a directional trade. Okay, but 10% of the people, the smart people who makes money in the market, they understand the trend and be in a strategy. Okay, that's very important. Understand the trend, market trend, and be in a strategy. No one can stop you making money. But if you go and take trade blindly by thinking that you know the technical analysis very well and all, see, buying is chasing the market using the chart is speculation. It's a gambling. Okay. But if you understand the trend and use the right strategy, deploy in the right way, position sizing, and be calm about your strategy, then you always win. 90% of the people lose because by looking at this, sir, why can't we take a buy call option or something like that? Okay. Or in this case, we buy only the put option. Yes, you make money. Sometimes whenever there is a false breakout on what time frame you are trading, it is also very important. If you are a long term, you can go and check out 15 minutes. Okay. You can go. Okay. But if you are following technical, don't take hashtag decisions here. It will be making you emotionally weak in this kind of situation. If you see even 15 minutes, if you don't exit here, it has touched here, again, it has gone there. So in this part of decision, you might have entered almost there is no entry here in 15 minutes. It's very tough. So big trade lose here. That's again, as I told you, you become a speculator and you are bound to go wrong by emotional decision. Yes, if you want to adapt all these things, you can automate it. That gives very good result. But to automate, you need to have again a proper system where you can build again multiple strategies on option buying strategies. We always use algorithms to take a trade when it is comes to technical. We in that parameter also we almost add 5 to 6 conditions. Not only this, okay, we will add indicators like super trend, Bollinger Band, the RSI, and RSI is one more indicator again, whether to understand whether it is relative strength index. This is the only leading indicator which will tell you whether it is in overbought situation or oversold situation. So RSI, it will not come in the graph. You will have a separate column here. You can see here all RSI range is from 0 to 100. Okay, that we can bifurcate from usually 30 to 70. 30 is like it is oversold. Okay, and 70 is the one it is overbought. Okay. So usually if you see the RSI in 15 minutes or 5 minutes as well, whenever it is below 30, so you can just change RSI level to different 2080 as well. I usually follow 2080. Where is the RSI here? Okay, RSI settings here. So this is 14 minutes length. Okay, you can just say here visibility, I inputs. Okay. Upper limit, you can make it to 80. Okay. Lower limit, you can make it 20. And middle is always 50 is good. Okay. If you see here, whenever it touches 20, this is the buying area. Okay. So at any, because it is a oversold zone, usually whenever it touches 20, RSI is 20, you can see the movement here. There will be a sharp movement. And whenever it comes to 80, the profit booking comes in. So up, you can see any given point of time, any RSI will not go below, and it will not withstand below 20. Sometimes it will be below 10. This is an excellent buying point. That's where we use RSI whether to identify any of the stocks, whether it is in oversold or overbought. Okay, and RSI changes with the time frame. Don't go and blindly see. Okay, if the RSI is 10, say maybe in 5 minutes. But if you go for a longer time frame, it is not 10. Okay, it will be at different level. Okay, if you go and see in 50, any given point of time at 15 minutes also, 20, if it is touching 20, excellent. Go for a buy. Okay, and any point 30, you can just, that's where the 80, that's where the profit becomes uh, profit booking will come. Okay. So 70 to 80. Okay. RSI 70 to 80 is an excellent for scalpers. So scalpers don't go and buy when it is either they will buy at 20 or above 70. Okay. You can see here if you see, and in that case, you have to change that to 70. Usually, a lot of people buy, you can make it 70 here. Okay. A lot of people buy here when there is a 70. If you see here, at 70, if it is crossing 70, you can see a huge jump of price. Huge jump. 70. I have created a lot of strategy to buy an option when the RSI is above 70. You can see that has given excellent returns, but there should be a quick entry and quick exit. You get excellent movement here. If you see here 70 crossing 70, boom, 80 is the profit. Exit, enter it when the RSI is, this is 5 minutes. Enter above 70 and exit when it reaches 80 or 77 kind of thing. Above 70, above this one. So whenever there is above 70, sometimes there will be a lot of above 70, 72. Okay, I always suggest there is a dip here 70, 71, 72. Above that, there is a profit booking also expected. This is where you have to go for a risk to reward ratio. You can check out my video on YouTube. I have explained excellent strategies. Like even if you are entering above 70, what should be, then you should always follow risk to reward. 1:2, 1:3. That's it. Then you will make money. So this is all about RSI. There are again MACD is also there, moving average, convergence and divergence. We call it as MACD. MACD. This will give you a divergence. Okay. Okay. You can see here with the volume. This also almost reflect whenever the blue line crossing the green line, you can just buy it when RSI is 20. You can just check out here. This is clearly indicating in yesterday's market in a 5 minutes, all the indicators are saying buy, 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 buy. So don't be okay. You can see here if you see uh, green line crossing the purple line, it's a buy. Okay, here if you see already recovering from 20 and it is at 30. Okay, buy. And if you see the MACD, it has clearly told well in advance here itself in the morning. Where is this? In the morning when there is a blue line crossing here. Here only it has given. Okay. When the market was here. So first understand the MACD if it is crossing over and if you see the divergence converting into positive. If you see here, this is the diversion. There was a selling here and green candle started coming here. Green candle started coming here and this is a crossover above RSI, Bollinger Band turning. The moving average also moving higher. Okay. And from narrow Bollinger Band, you are seeing upper Bollinger Band, the candles touching the upper Bollinger Band. That's a trend. Whenever the stocks, I'll just remove this RSI, and I think you have already understood. RSI 20 to 80 range. 20 is oversold zone. 70 is just 70 to 80 is overbought. You can expect a profit booking. Divergence, MACD. Okay, whenever this gives well in advance about the direction. After first look at MACD, then look at RSI and come to all other technical analysis if you are really have time, okay, and analyzing the chart. Okay, we can just close this, delete this, delete this, and come whenever those two parameters comes in, and here also whenever it touches the upper Bollinger Band, that trend is positive. Okay, so I think the CPR is central pivot range, which I told you, right? This is central pivot range. I'll tell you what is central pivot range for Nifty. CPR, this if you see here, CPR plus Camarilla. CPR, this we have coded. CPR is nothing but this is an upper purple line. Here is a pivot purple line. And you can see here. So this is 1, 2, and upper CPR. This is CPR, central pivot range, we call it as this to this, the purple lining here, here. And over and above that, these are all again different levels. If it is crossing above the CPR, definitely it is going to bullish. That's why you have seen as if at all, if I want to go long in Nifty, I decide here if it is crossing 22,781 and sustained above this pivot, then only we will go long. Otherwise, in the pivot level, we will not give any buy recommendation. It will be in a consolidation road. Only above this 830, 840, you can go long in Nifty. And if you want to go short in Nifty, you have to wait for this level to break. Okay. If it is broken, 680 is broken, then 607. This CPR, this purple line is broken, you can expect Nifty to come here. Okay, that's how it respect each and every level by analysis, technical analysis. You use it only for identifying the trend and deploy these strategies. Okay, whatever strategies we have learned till now, okay, ratio spread, okay, selling OTM, because if you are find trend as bullish strategy, you go for covered call, or you can go for put calendar spread. And if you find bearish, you can go for call calendar spread. Okay, if it is neutral, you have to build iron condor and iron fly. You can deploy both two strategies. Okay, put bull spread. You can just for this is a bearish strategy. Okay, put back spread. Okay, call back spread. We have given it as a bullish strategy. So I'll be sharing this PDF as well so that you will understand in what strategy you have to deploy this. Okay, that will help you. Just practice this. Okay, once it goes to your subconscious mind, understanding practicing is main important. Whatever you learn it, you have to make your hands dirty. Okay, go and deploy these strategies, because you are not going to go for an unlimited loss. A lot of people have a myth that option selling is an unlimited risk. Okay, that's a wrong assumption. Okay, if you are in naked position, then you go for a long unlimited risk. Okay, you know how to hedge your position. Just define your losses so that you will not go out of your mind whenever you see the MTM. You know exactly how much you are going to lose, what is the probability, and whether you are in a right strategy. And if there is a trend reversal, okay, just exit that strategy in loss, and don't over trade and over optimize. Your over adjustment of the strategy is not required. Sometimes your decisions may go wrong, but just come out of this strategy and don't partially exit the strategy and try to build some other strategies and all till you become an expert. Okay, you have to practice. Once you learn all these strategies, you can combine all the strategies and be in a market like a king. Like you can build a big ship. Okay, that's where a big wealth creator, wherever the market moves, we never go wrong, because wherever plus or minus 5%, 10%, you should be in profit. So nothing should change. So emotionally, uh, you should be very strong, and only strategies can make you emotionally strong. Okay, so that's how it is. Uh, we will talk about the expiry trading. Expiry trading is completely different about the strategies what you have learned. Usually, don't deploy all your amount. So we usually suggest, okay, to deploy 20% of your capital. Okay, so if you have 10 lakhs, deploy only 20% of your company. Slowly deploy more and more money as the market moves and the time moves. Okay, so monthly expiry do only in Nifty. Okay, Sensex is highly volatile. You can just go for a buying. Don't go for a selling strategies in this kind of market. Okay, very rarely you will make money in option selling on the date of expiry. You should always go for a buying. Keep adjusting until 2.45. Maintain strict stop loss and exit when gamma effects comes. Gamma effect is nothing but you might have seen the 75,000 call option put going from 4 rupees to 400 rupees, right? On the date of expiry yesterday. When the gamma effect comes, you have to just exit and move the strategy. You can always watch our premium calls, which we gives on Sensex whenever there is a blast. Strict stop loss is required. Date date of expiry from 2:30 to 3 o'clock, you can go for almost, or even 2:45 to 3:15, you can go for a selling strategies. Otherwise, till 2:40, be in, uh, deploy only 20% of your total capital. Slowly deploy more and more, be in strategies, go for a buying and selling combination. That will help you. So option Greeks are the basic one, because as you'll be trading lot of strategies in options. So let us understand what delta, gamma, theta, vega, and rohu. Okay, definition. We'll understand definition and the effectiveness, right? So delta measures the change in the option price for a given change in the price of an underlying asset. Say, suppose, as I told you, Nifty. Okay, for every option, I will show you the delta. For every option, you will find a delta. Okay, right? So strategy builder, if you come and choose Nifty, still practice trade is becoming build strategy. But this is not going here. Order book. Okay, I think I have to close this. Okay, build strategy. So 22,700 trading. If you see almost at the money, you can see here delta zero point 0.5. So this says, so market if from 22,700, if it moves to 22,800, this zero point 0.5 delta will become, so this option will move by 50 rupees. So every change, it measures underlying asset is nothing but the Nifty. Okay, it changes in an option price in a given change when the underlying. A delta 1 means the option price will move in lockstep with an underlying asset, while the delta of 0 means that as option price will not move at all with the underlying asset. So this option will move for every 100 rupees. This 260 rupees option will go move by 50 rupees. This will move by 48 rupees. This will move by 45, 42 rupees. If this option, if you go OTM, 71 rupees call option will become for, if the Nifty moves 100 rupees, this will move by 20 rupees, zero point 0.2 delta, because from 71 to this option will come to 91. Whereas this 265 rupees, 270 rupees option will go up by 50 rupees. Okay, this will be if the market moves by 100 rupees, this 270 rupees option will rise by 50 rupees, which is around 320. This will come to 320, whereas this option will come to only 91. So there is a 20 rupees movement. There you will find 50 rupees movement. If the delta is 1, Nifty futures has always a delta 1. Okay, if you see here, if you buy this option deep in the money, where the delta, usually delta 1 is seen in very, you after ITM 3 and 4, this option, if you say take 21,700, this option will move by 90 rupees. If Nifty moves by 100 rupees, this will move by, this option will move by 90 rupees. Okay, so there will be no, almost you will get, it's nothing but deep in the money if you buy it, it's nothing but you are long in Nifty. So maximum loss you can occur, rather than, as I told you, we don't trade in futures at all, because future trading is not at all required if you understand the options. So in the same way, in the delta also it is applicable. Here if you see, deep ITMs will have more delta because it moves higher. Okay. That's why we give, whenever we give a buy call, we give an option which has a delta of at least zero point 0.5 and above, zero point 0.5 and above, because if the Nifty moves, it has to move proportionally. If next understand the theta, then okay, gamma measures the rate of change of an option. Delta, if the delta is keep changing, because delta keeps changing for a given change in price, the underlying asset, gamma is an important metric for option traders who are looking to hedge their positions and manage risk. As I told you, this 22,700 call option, if market moves to 23,000, okay, this delta from 0.5 to it will become 0.9. Okay, all these deltas which are at OTM, zero point 0.3 delta will be moving upward. Whenever the delta crosses 0.8, zero point 0.9, the gamma effect comes in. If this delta rigorously move to zero point 0.7 and zero point 0.8, then the gamma effect comes in. You will start seeing the gamma effect whenever it reaches the strike price. Okay, the gamma, if say suppose this 23 rupees call option, it has a delta of only 0.3. Imagine if this tomorrow market is opening at a 23,000 and this delta will be moving to almost zero point 0.7, zero point 0.8. That's where the gamma effect. So as and when the gamma, uh, the delta of the options becomes from zero point 0.2 to zero point 0.7, zero point 0.8 within no second, that's where the gamma effect comes in. So in the gamma effect, if you want to hedge your positions, you can just go and buy just the above the OTM to hedge your position so that the gamma blast doesn't kill you when you are in option selling. Okay, theta measures the rate of time decay. Okay, over a period of time, the option premiums get decay. Okay, say suppose if you have bought this option, okay, 23,000 call option, if the market is not moving, this 130 rupees premium will come to 128. Okay, because even if the market moves and the VIX comes down, it will be keep losing its value. Okay, so theta is often used by an option trader to estimate how much value of an options will lose due to the pass of time. Okay, if you see here, if you create any of the strategy here, okay, you will see a option Greek column here. The theta is 26 rupees. Over a period of time, it will both of them will lose 26 rupees if the market is not moving anywhere. See, if you see here, that's how the theta game comes in. Okay, every day. If you see here, this how much you are making profit here because the theta value will be keep changing. Okay, the option loses its value very well over a period of time. If you see here target price on Monday, if the market is stable, 217 rupees put option will become 78, 309 rupees option will become 166 on Monday. Tuesday is the expiry. Okay, it lost all its value and this also lost all its value because if you see an option chain, the theta value will be very high. Okay, you can expect usually gamma. And coming to next, Vega. Vega measures the sensitivity of an option price, okay, to change in the implied volatility of the underlying asset. So Vega is an important metric for option traders who are looking for trade advantage take of the market volatility. So if you have any kind of strategy, you have to keep Vega positive, okay. Vega, you make it as a friend, okay. If the Vega is negative, you are at a high risk. Okay, there is an unlimited risk. That's why we hedge our positions to make Vega plus. If you see here, the Vega, if you are in naked selling, the Vega will be negative. And as soon as you go for any buying, okay, the Vega will come into in the buying, the Vega will be positive here. So buying has a positive Vega, selling has a negative Vega. So that's why you have to overall strategy to keep it positive. Okay, we use Vega. Vega is not that much affecting any of your strategy. You just need to make a friend. Without selling, the Vega will be negative. With buying, it controls the risk. Okay, so that's why make Vega as a friend whenever you are going in a very huge loss. If you buy any of the Vega will come down. So that's where it is used to okay take advantage of the market volatility. When will you be at risk? If you are in an option seller, see option sellers or buyers need to understand this. The option Greeks matters a lot, even directly or indirectly. It will be keep affecting your positions. So in a simple way, you need to understand the statistics of it. So these are all the statistical terms which may be feeling difficult for you to understand, but once you understand, adapt it, unknowingly, you will be having a free mind. So whenever you are going for your Vega is negative, buy any of the options against your position, your Vega will positive. So you will limit your loss whenever the market volatility is there, make Vega positive. Okay. Rohu measures the sensitivity of option price to change in interest rate, okay, is an important metrics for option traders who are looking to take advantage of change in the interest rate. So it is not applicable to us any given of time. It usually applies to people who are trading in bonds and leaps. Okay, so that is not much important for whatever strategies we have learned it. Whenever there is an interest change in the bond and all, that's where the row comes in. So understanding the option Greeks is important for option traders to make informed decisions as it helps to estimate the risk and potential probability of the traders under different market conditions. I hope everyone is following. So this may be quite theoretical, but yes, you have to be sure about when someone is talking about option Greeks, what is delta, gamma, theta, vega. Okay, at least being an option trader, you should know what these terminologies mean and how it is going to affect your positions. Okay, this is a very basic things. There are few strategies where we built on the gamma chain, the gamma blast, okay, with delta neutral strategy. People call it as a delta neutral strategy. Okay, I will show you what is delta neutral strategy. You should not go to any, you should not be confused, right? Delta neutral strategy is nothing but if you are selling, if you are an option seller, delta neutral strategy is selling the same delta value of call and put. Say, suppose, see, put option delta, it is at zero point 0.4, zero point 0.3, you sell this, come to call delta, understand where the zero point 0.3, here sell it. So 0.3, zero point 0.3 delta, you have sold. This is a delta neutral strategy. If the payout charge will be again neutral. Okay. You always see the prices of the options will be almost equivalent 186, 170, already 0.38 delta, 0.39 delta. So if you, by looking at the option premium only, you can understand that you can enter the delta neutral strategy. And when you are going for a buying, you can go and buy the same deltas of where exactly 0.17 delta if you're buying, you can go and buy 0.17 delta here as well, rather than going for an option 0.75 delta. This will become an iron converter with a delta neutral. Like if you see here option Greeks, you can just see here Vega, we have made it positive, and total Vega is still negative. It's okay to take risk. If you remove the buying, the total Vega will become completely negative. So as we have bought it, so you can see here the decay, the theta, the delta. The delta of this option 0.38, 0.38, it's a neutral one. That's where you make a lot of money when the market goes sideways. So this is all about delta, gamma, theta, vega, rohu. Okay, option Greeks. Uh, Next, money management. Finally, okay, so how actually you have to manage your money when you have higher capital. So these are all the strategies where for the people who always want to be in the market. So market will reward only for the people who are in the market. Okay, already in the market. People will market will not reward who just come and go for a thrill. Okay, entering the market when the movement comes in, that is all excitement, gambling, speculations. That there is not real big money. You cannot scale up, okay, using when entering and exiting the market continuously. So money management plays a very important role when you have a good capital, okay, and you have a vision to grow that capital systematically. So invest 70% in different instrument, okay, pledge and trade to protect your product. That is number thumb one rule. So if you, even if you have 1 crore, 2 crores, okay, 3 crores, if your mindset is correct, you deploy 70% on Nifty Bs or Bank Bs, just be in the market, just protect the capital, pledge it. Protection is free. People are not using that. Pledging, selling a call option and protecting it is a free. You don't have to pay extra money for that. In our life insurance, we have to pay the premium. We cannot pledge ourselves. Pledging ourselves like we work for someone, okay, and we get salaries. That's what is the pledge. But if you have a portfolio, pledge it, cover, protect your portfolio first. Deploy 20% in rules-based trading in option selling. Okay. So if you can afford the algo cost and all, you go for an algo strategies. Or as I told you, you can deploy 20% of the pledge amount. First 70% you protect your capital, 20% you can be in a strategy which I told about the butterfly strategy. Okay. Have a wide range of plus or minus 10% of the market movement or 5% of the market movement. Understand the standard deviation, one standard deviation, two standard deviation, deploy the strategies in two standard deviation so that 96% of the probability is there for you, and keep 30% cash for an opportunity trading fund. Be in straddle, be in strategy as per the market behavior. So this 30% cash, as I told you, you have a wide range wherever the market close in two standard deviation, you are definitely going to make money. Okay, when there is a huge movement, and this 30% this one, whatever money you have, you deploy in a market behavioral strategy. I told you, right? Understand the market trend, deploy the strategy with 70% of probability. So here I'll tell you, portfolio investment of 70%, that is 100% sure that we are not going to, it's protected. Okay, 20% in rules-based trading and option selling. 30% you go with a strategy which have more than 60 to 70% of probability of winning. Okay, keep changing the strategy as per the VIX and market condition. No one can stop you making money, and this will keep giving you consistent money. Okay, a smaller amount, not exactly a smaller amount. People think that it is a smaller amount. Imagine you making a 2% return per month. It's a great work. Okay. Don't try to beat the world's best trader who makes around 30 to 50%. They become the world's best trader because they are consistent. If you make, okay, 30% a year, okay, consistently for 3 years or 5 years, I will show you a simple example of how you can grow. Usually, what happens, I always have this 100 crores plan in my desktop. You can see here 100 crores. How to reach, because your vision should be bigger. So you can just see here, okay, 100 crores Excel sheet, which I usually use it to define what kind of percentage if you make it, where you will reach. It's a predefined strategy. Okay, where usually, what is this? This is not opening. Okay, here it is open. Okay, the power of compounding, we can say it. Okay, if you see here, if you start with 1 crore, okay, 30% per year, okay, in just see here, you will have 1 crore 30 lakhs and 1 crore 2 crores. You can double your investment. 1 crores become 2 crores in just 3 years. Which financial instrument gives you? Tell me. Okay, 3 years. Okay, that is the power of quantity. Even if you make 30% a year, forget about the portfolio appreciation, what you get. This is only you can make use of portfolio and earn 30%, which is only around 2.4 to 2.5% a month. Your aim should be to achieve this. Okay, once you have this, then go and take more risk on the option buying, or it is left to you. You are already an expert. You better know how much to risk you got to take and where to deploy. So even if you see 2 crores, okay, you will be reaching it in a very third year, and you will be almost making 100 crores by 15 years maximum. Okay, if you consistently make 30%. Okay, I have not calculated the expenses. Expenses is for who want to come for full-time trading if they want to remove it and all. That's how the compounding works. You just keep investing this 1 crore 30, and you can see here 2 crores will become almost 6 crores in the, you can keep almost 5 years plan. So your 1 crore investment will become almost 3.7 apart from your portfolio appreciation. Okay. So that's how you should reach your goal. If you want to reach your goal, don't just come with 5 lakhs or 10 lakhs doing option buying only. No, that scalability is not. You will be always deviated with the emotions and frustrated. So have a goal, keep adding money. Don't stop investing. This is the right time to invest. You can go and buy the quality stocks, protect your portfolio, be in the strategy, understand the market directions and all. So this is very important in money management. Next comes very important is risk management. Okay, money management, understanding all the strategies. So keep portfolio stop of around 5 to 10% of the capital. Okay, so you have already protecting your capital is nothing but it's already a stop loss. Okay, that will not change. Okay, keep some strategies which are immune to black swan events. In the sense, as I told you in the black swan events, if the market, so usually the market may come down by 10% or 15%. It has a freezing point. So always hedge your positions if your position is high. You say if you have 1 crore or 2 crores or 5 crores of portfolio or even 25 lakhs of portfolio, go and buy a long-term options whenever the VIX is down or something like that. Go and buy a put option for a black swan event. Just keep some strategies for a very bearish moment when there is a uncertain events like COVID or Lehman's brother crash, right? You should be always be ready for it. Okay, constantly take profit out of your investment in cash market. As I told you, nowadays cash market you can use our auto investment bots. All of you know that's where the systematic investment comes in, right? So you can keep it in bots so that your portfolio is actively managed. If you see over a past 2 years, you take any of the stocks, it has given a negative returns. But whereas if you use our bot, okay, so you keep booking the profits. So manually it is very difficult. You can use our auto investment for that. Constantly take profit for 1 or 2%, and again can be continuous bots. You know how to do that. Hedge in the cash market positions, invest in large caps so that you can easily hedge with the options. So usually invest in the stocks where it is in a future and options, or Nifty 50 is a better option. Because whatever may be the underlying asset, you should make consistently money. That's what is the motto. Don't try to chase the bigger moves like, okay, you can chase it anyhow. We will be giving our research calls in a stock ideas for a swing trading and all. As you have 30% cash, right, which is an opportunity fund. Either you can be in a strategy, or if you want to go and deploy in a cash market, you can just use MTFs or pay later and take a leverage of 3 to 4 times. Keep some booking 30% profit. You are the master of your mind, right? So I don't have to really tailor cut and tell you where you have to deploy. You should know what are all the instruments you are good at and what you are comfortable on your time frame. Uh, Good quality mid caps is also okay sometimes. If there is a movement, you can just go and deploy that. Okay. So trading type is, again, you should to understand discretionary trading. You make decisions on your own on an instant basis. Okay. Non-directional trading with all the strategies. I am a non-directional and a discretional. I am a kind of all kind of trading trader. Okay. So non-directional trading is, I have already told you, if you are trading in a range, so you are a non-directional. Discretionary, okay. First one was the directional trading. Those who chases the market, understand the market direction and take the trades only on a direction. So discretionary trading is understanding whether to be a directional trader or non-directional trader. You discretionally decide. Fourth is algo trading. You know, if you automate all these types of trader, you will become an auto trader. Prop trading is completely different. If you are a prop trader, you will be having a funds of a proprietary trading firms. You can trade in the prop. If you become an expert, okay, if you know all these strategies and if you are consistently profitable, you can join any of the prop funds. They will give you funds, you make money, and you get your rewards. So there will be a profit sharing for a prop trading firms. Okay, so they give their a large funds. They will be having proprietary trading firms. They hire traders. Okay, they allocate certain amounts to you, and if you are a profitable trader, you get your cut as per the agreement, whatever they are having it. So investment and trading are two different aspects. Investment involves buying assets such as stocks, bonds, real estate, and mutual funds. Okay, keep all your digital assets in one platform. Make best utilization of it. Okay, the goal of generating the return on that investment over a long-term period. Investment strategies are generally focused on long-term and stability with a good and building wealth. Right, as I told you, investing is the key. You have to be in the market. So build an asset, like how you buy an house, how you buy some properties, how you buy lands. Okay. So here buying any of the assets, like if you own any mutual fund, that is your asset. If you own any ETFs, that is your asset. If you own any of the stocks, whichever you have purchased in full cash. Okay. So that is your investment. To protect that, whatever you do trading. Okay, buy, sell contracts, future and options, and speculate. That is called as trading. On the other hand, involves buying and selling of the assets. Okay, it's a goal of generating profits in a short term. Okay, trading, everyone knows buying and selling is called as trading without having to either it to protect. So, what usually I suggest is invest first to protect it, trade. Okay, when both investment and trading involves buying and selling of the asset, the primary difference of the goal is the time horizon, right? So invest for a long term, trade for a short term to protect it and make short term profit. So that's about the difference about investment and trading. Don't get confused. Lot of people I see when I talk to almost 100 of the people, lot of people talk about only trading. No one talks about the investment. I don't encourage them. If you are an investor, you are a trader. Okay. So without investment, if you are a trader, I call them as a very short term speculative. They come and go. Okay. They don't have a goal. They don't have a vision. Okay. Because they don't have an asset. So imagine if you don't have an asset, if you're a trader, how much ever money you make, you don't have an asset. So tomorrow, if you don't trade, you're gone. What there will be you will be left with simple cash, not an asset. Okay. So first, whatever profits you make, start building the assets. Okay. Asset is the main thing. So if you combine both assets and trading, that's where you can achieve your goal. So that's I think. Oh, okay. Today it was a long day. It carried away. Okay. I hope everyone got this workshop useful for you. Okay. That's it for today. If there is any questions, please ask me now. We'll wind up in 2 minutes. I'll just stop sharing. Okay. So you'll get a recording of this, whoever has not joined. Any questions? You can type in the chat as well. Okay. On screen chats were not visible. Okay. Okay, fine, guys. I think this completes the workshop. Thank you very much for your time, and I hope this added value to you. See you and again the next workshop. This completes the workshop. Okay, if someone wants to re-attend, we will conduct after 15 days for the new users. Okay, thank you.